Hello and welcome back to Chart Wrap by True Options Masters. This is Mike Merson, your managing editor speaking, and this week, like every week, I'm going to take you through the hottest charts I spotted throughout this crazy market week. Now, if you've been reading along with True Options Masters, which you definitely should, it's the greatest options trading e-letter in the world, you might notice it was a little light on charts this week. One, because we had our monthly market outlook video on Wednesday, which you should definitely check out because Chad Shoup pointed out the energy sector at the beginning of January, which rose 10% while the rest of the market went in the dumps. So if you followed that trade, you made money while most people did not, which makes those extremely valuable to follow. So go check out the monthly market outlook. Got a little too excited there. And the other reason is that Mike Carr posted a very sincere, thoughtful piece about his grandfather in today's True Options Masters. And I couldn't follow it with any kind of technical chart. It just was not appropriate. But I'm going to make up for it because there was a lot of crazy chart action this week that warrants talking about. And what's weird, and it's kind of going to be a theme this week, is that there's more volatility in the regular stock market right now than there is in the cryptocurrency market. So let's just dive right into it. Yeah, so we're going to start here on Ethereum. Wow, we're breaking out. I haven't even looked at this yet this morning. This is fantastic news. Okay, so this is the chart of Ethereum. You know I can't shut up about Ethereum. I think it's the investment of the decade. I think there are lots of reasons to be bullish on Ethereum in particular, and crypto in general. But what we are seeing here is potentially the breaking of the downtrend. The downtrend that has been plaguing crypto investors for months now. You'll recall we topped out in November. This was at 4,800 per ETH. I was dancing over here, but I haven't been dancing lately. Excuse me, I've been too busy buying to dance. That's the reality. I've been buying Ether definitely too soon, but also all the way down. Remember I picked some up a couple days ago for around 2,600, and it looks like, I mean, if this measly white line is any indication, Ethereum is breaking out, approaching $2,900 per unit. RSI just coming into neutral, not even overbought. Really not much to see on the momentum indicators. We had a bullish cross back here, and we're seeing some real momentum pickup on the strength meter down here. That's just my dumb word for it. There's probably a more technical term that I don't know. But this looks bullish to me. I would hate for this to get sold and for us to go see lower lows, but it's certainly possible. I remember, in the depths of my despair, I was texting Chris Cimarelli and I said, we'll see sub 2K ETH. We might. I really hope that we don't. Let me just go ahead and turn off my desktop audio. Sorry about that. But if we do, I'll be bidding hard, and I think you should as well. However, right now is time to be optimistic because Ether is looking very bullish. All the moving averages on the long time frames have crossed below the very long-term 200-day moving average, which is not great in terms of an intermediate-term trend. But if we look at the weekly, we are still on a very nice bullish trend. Now, are these lines going to consolidate here or keep falling? That remains to be seen. I do think it's possible we'll see a sub 2K ETH, but if we breach the previous market cycle all-time high of 1,400, I would be shocked. There's just too much bullish development going on in Ethereum. There's too much institutional money at play, etc. Let's just look at the whole market cap picture. I mean, heck, guys, this sure looks like a higher low forming to me. I mean, forgive me, but what do we have here? We have higher highs and higher lows. RSI's at neutral. MACD looking pretty ugly, but it's about time for that to turn around. I just think if you've been holding off crypto, there are obviously worse places to be buying, right? And let's just, for the sake of it, because I like looking at these a lot as trends, let's look at the Heikin Ashi candles. So as a reminder, Heikin Ashi candles are a lagging indicator, which is very useful for spotting shifts in long-term trends. And a quick refresher how they work. In bullish uptrends, you want to see green candles with long upper wicks, no lower wicks. And then that essentially continues on. If you see that candle print, you can be sure that we are still in an uptrend. When you see the trend change is when you see these long upper wicks and long lower wicks on the candles of either color. And for that to confirm, you usually want a candle of the different color to follow, followed by long lower wicks and no upper wicks. That's what defines a downtrend with red candles. So, what are we looking at today? The entire cryptocurrency market cap on the Heikin-Ashi chart is still in a downtrend because this candle right here still has no long upper wick and still has a long lower wick, and we're still seeing a red candle on it. So we're not out of the woods yet on this downtrend. But if the bulls can make a really nice move, bringing the crypto market cap anywhere up to like 1.8 trillion in the next few days, which is probably a tall order, then this would become a trend change candle at the very least. And then what we'd essentially want to see is a green candle confirm that and for this to rise up again. So I've apparently put this line here as resistance. I can kind of see it. It's easier to see it on the regular candles than the Heikin-Ashi candles, but yeah, you can see how this is acted as resistance and support in some ways. And now we have a rising support line to help us out. So if we bounce off of this and the crypto market cap revisits this line, I would not expect us to break right through it by March. We'll probably meet it, come back down again, retest this rising support line again. Let's just extend this out. We'll revisit it later, maybe in a few months. And we could then, at that point, because what we're looking at here is essentially a rising triangle pattern, a massive one. So this is something to keep your eye on. I spent enough time talking about crypto. Let's talk about the dollar, the crypto's main competitor. So a few days ago, I was looking at the dollar chart and I was just like, I'm not convinced of this uptrend. I just think the dollar's done too well almost the past year. And I felt that we were going to come hit this rising support line again. You can go back to, I want to say it was Tuesday's issue, and see that I was saying probably somewhere around here that we're going to come back and test this support. And so that's exactly what we've done on the dollar, okay? You do want to listen to me sometimes, and you'll see even why you should listen to me even more on our next chart. But the dollar is coming back to support. Are we going to break through support? That would be very bullish for stocks, cryptocurrencies, and things that are not safe havens, essentially. Risk would be coming back into the picture. And there are hints of that we'll get into later with some of our other charts. But the dollar is always an important barometer for risk in the markets. When the dollar is rallying, it's essentially an indicator of a risk-off environment. Getting a bearish cross on the MACD down here. RSI, not really much to speak of. Not really much to speak of in general with the dollar. This is just something to watch as a long-term macro indicator. Let's move right along. Energy stocks. So you might remember a few weeks ago, I believe it was here, I was watching this resistance line in XLE telling you it was time to sell energy. Turns out, if you'd done that, you would have avoided a 9% drawdown. You also, if you didn't get back in, would have avoided as high as a 16% up move. So I wish I could have told you to get back in. I don't write about the same stocks every day. You guys know that. But energy's still looking pretty good. So we have a significant breakout happening this week coming up out of this channel that we've seen forming since basically the start of the pandemic. Touch, just tightening. But we're breaking out. Now, today, these are the daily candles. The rally this morning is definitely getting sold, and the candle just flipped red. So we might come in and retest this former resistance line as support. But the energy story is a long one. I think we're going to see energy outperform a lot of assets, not just this year, but potentially over the next several years. So I would use any kind of sell-off in energy from these levels to pick up some exposure. Speaking of, once again, Chad Shoup, beginning of January, said energy stocks are what you want to own in January. Energy stocks wound up being like the only thing that rallied in January. Go figure. Maybe you should listen to Chad Shoup. He's kind of a smart fella, and that relative rotation graph of his is a very, very, very handy tool. Of course, he has it configured in a way that suits his needs and suits your needs. So if you want good signals, make sure you're watching Chad Shoup. Okay. So a lot of people accuse cryptocurrency of being too volatile, but I would like you to take a look at some of these tech stock charts over the past week and just look at these moves. I mean, PayPal just annihilated. And I'm pretty sure this was because of an earnings report, but that's a 30% candle in 1 week. And this is a multi-$100 billion company? That's crazy. I can't think of the last time we saw a 30% weekly candle in any crypto asset. I mean, we might have seen one in the most recent sell-off. Let's look at Ether real quick. What's the worst weekly candle here? This? 27%. All right, close it up. Close it up. You got me there. It happens. But the point is, things are getting weird in the legacy markets. Like, this is extreme. And if you're a PayPal holder, you're having a really rough go of things this past year. Like, because this thing was up at $313 a share, now it's at 123. I don't use PayPal. Do you use PayPal? Leave me a comment. I mean, I only use PayPal when I have to, pretty much. I have an account, but, you know, I'm using Cash App, I'm using Venmo, and even that I use very scarcely. So, you know, maybe we're starting to come to the realization that a lot of these tech names are maybe kind of done. Like, let's look at Facebook, for instance. Devastating. Look at this arrow I drew yesterday was not long enough. Let's bring it in. It's falling even more today. 28% candle. Sorry, like, let's go to the top. Almost a 30% candle in 1 week. What is going on? Now, I know Facebook's earnings report came in a little under expectations, but it sure wasn't that bad. Monthly active users are dropping. Yeah. I mean, they missed on a few metrics, but my God, this just feels devastating. I think the larger story here is that investors are not convinced by this meta push. I know I'm not convinced by it. I've yet to see anything out of Facebook that convinces me that metaverses are the future, other than some really corny looking VR conference rooms, which I really don't want to do. So, I don't know. I agree with Chad. I think this is one to stay away from. Snap, however, an outlier. Yeah, it's had a rough year, but man, it's having an exceptional week. I missed my tool there. Up over 50%. And this was after falling, because you could see by the candle here, close to 25%. And let's just look at Amazon real quick. Amazon just annihilating this week. Look at this recovery. My God. This is off 16% from the lows. Doesn't sound like much. Amazon's a multi-trillion-dollar company. Or not multi, but over $1 trillion, easy. Boy. I wish I was bidding Amazon down at these levels. The options are expensive, but if you were long Amazon calls into earnings, you are rich today. And that is fantastic. So why is there more volatility in the legacy markets than the crypto markets? I have no idea. But I still think the best trade right now from a risk-reward perspective, sounds crazy, but I think it's crypto. I think it's specifically Ethereum. And it looks like this breakout only strengthened since I started this video. So folks, that's going to wrap it up for me. I really hope you enjoy these videos. You know the deal. Like, comment, subscribe, share, ding that notification bell, all the things you love to do on YouTube. And be sure you're reading True Options Masters. I'll remind you once again, the issue that came out yesterday from Mike Carr is kind of a must read to get to know the man behind the charts and the numbers and the insights. So thank you as always for watching. I appreciate you. Thank you for reading True Options Masters. And I'll see you next week. Later, y'all.